Hello, my name is Aya Yoshioka, Portfolio Consulting Director and Senior Investment Strategist here at Wealth Enhancement. Welcome to another edition of 7 Market Movers, where we cover topics ranging from economic growth, inflation, interest rates, and much more. So let's get started. Global equity markets have mostly risen over the past week, even as the US continues to endure through a government shutdown. So we're going to start with some news outside the United States, and I'm going to start with Japan. Stocks in Japan surged higher earlier this week when Sanae Takaichi was elected as leader of the ruling party, with expectations that she will be the first female prime minister of Japan. She's a fiscal and monetary dove, and expectations for further stimulus bolstered markets in Japan, with the Nikkei soaring above 48,000 for the first time ever. Markets in China reopened on Thursday from a week-long holiday, and Beijing reported that consumers in China spent 809 billion yuan. That's equivalent to 113.5 billion US dollars. And we're starting to see some pockets of recovery in consumer spending and consumption in China after some more structural property issues have plagued that market for quite some time. We know markets outside the United States have had a great 2025. Developed international markets are up nearly 24% for the year. Japan is up 22%, China up around 40%, and emerging markets overall are up nearly 30% on a year-to-date basis. So bringing it back to the United States, the US government shutdown has delayed key economic data releases, including the September jobs report and weekly jobless claims. However, we kicked off third quarter earnings season on Thursday with results from Delta Airlines and PepsiCo. Delta reported better than expected earnings and guided above consensus estimates, citing an acceleration in bookings across geographies. It's a great read through in terms of what we're seeing in economic activity. PepsiCo also beat earnings estimates, and both stocks were positive on the day, even as markets closed down on Thursday. Overall, Wall Street expects year-over-year third quarter earnings growth for companies in the S&P 500 to decline a little bit from the 11% growth rate that we saw in the second quarter down to about 6% year-over-year earnings growth in the third quarter. From a sales standpoint, Wall Street is also expecting a deceleration from the 6% year-over-year growth that we saw last quarter down to about 4%. However, some are then speculating that perhaps these estimates are a little too conservative, again, in light of the strength that we've seen in overall tech spending, a lot of announcements related to AI, and the relative sort of steady economic data that we saw prior to the government shutting down. Don't get me wrong, labor markets are still a little soft, and inflation is still a concern. However, corporations have endured through a lot of issues so far in 2025. Markets are still pricing in 25 basis points of additional cuts both in the October and December timeframes for the meetings that the Fed will have. And on Wednesday, we had the release of Fed minutes from the September meeting. And this was the first meeting in which the Fed cut interest rates in 2025. Most FOMC members judged that they would likely ease policy further, especially as employment continues to soften, even as a majority of members voiced concerns about upside risks to inflation. So it's still a balanced equation there, but they are leaning onto that employment picture in order to make their decisions, at least in the near term. We are scheduled to get a CPI report next week on October 15th, but given the government shutdown, we'll actually have to wait to see if there's some resolution there to see if we get that report or not. On the AI front, AMD inked a chip deal with OpenAI, pushing shares up 24% on the day of the announcement, and it's now up 36% on the week. According to the pact, OpenAI will deploy 6 gigawatts of AMD GPUs over the next few years, but it's still unclear as to how OpenAI will finance the enormous costs associated with several announcements that they've made with multiple partners, including NVIDIA and Oracle. With the US government shutdown, AI-related headlines that are both booming and worrisome, staying diversified and data-driven is crucial. If you would like to discuss your portfolio with me or anybody from our investment team, please reach out to your financial advisor who can get in touch with us. And we'd love to hear from you here at Wealth Enhancement. Thank you so much for taking the time, and we'll see you next week.